Hey everybody, DayTraderRockStar here. I'm going to bring you a dynamite video here. This video is going to be based off of a question I just got in an email from one of our listeners out there. And just to kind of update you, I'm DayTraderRockStar. I broadcast live trading every day here at DayTradingRadio.com. I've been broadcasting over since 2008, 2007. So that's quite a long time. I don't even know how many years that is. Started trading back in 96, 97. All right, and I teach a methodology, and I teach people how not to overtrade, and I deal with hundreds and thousands of traders all the time, and all the time frame, hundreds of traders every day in our chat rooms, thousands of traders that come through the site and ask me questions on emails, and knowing so many traders because I'm in the business. The biggest issue for traders and not being able to be successful, the inconsistency all comes down to overtrading. And I will tell you that, and you know that. If you deep down, you will know that. So the tough medicine to swallow is you could easily make money in this market if you had patience and discipline. But it's very hard to do. It's being in the casino and you have a lot of money and you just want to put it down. But I'm telling you, there is certain setups in the market that are going to give us a much higher probability of move, because the truth is the market is random. I mean, we could determine certain patterns, different momentum, news, trends, but overall we can't tell what's going to happen out tomorrow. That's going to affect the market. Either way, Fed talk, news, war, anything could affect the market. So it's always going to be a gamble, and the market could drop hard. And there's people's lives at stake, and there's retirements and everything. I've been through the 2008 crash. It was pretty serious, some serious stuff going on. And that's probably going to come back again. So it's you never know. But as a short-term trader, and this is what I teach, is short-term trading, because the same techniques that you're going to learn right now can be applied to long-term charts, and they work even better. So that's just incredible as it is. So to get back to the email here, he was asking about my quad rotations, and a lot of people said, "Well, quad rotate, what is that? This does not even look like stochastics." So he wanted to know. You mentioned a couple of videos pertaining to the quad rotation. Okay, so that will I'll put the links in the video for that anyway. But they're on the internet, and they're in on the YouTube channel. Day Trading Radio is a YouTube channel, and just do a search for quad rotation. There's thousands of videos, educational videos on this style of trading and with this method, and the updates and stuff. All right, just a lot of information out there. So John out there, I'm answering the email, John. This is kind of for you, because you got really involved in, you made some very interesting questions and stuff, and you were really monitoring the markets. And you're following up, you want to know what the quads are and stuff. And then you gave me a bunch of charts. 60-minute was a little behind, very close. And take a look at this chart. Trend line went up that far. We had a bounce right off of that. Take a look at that. And take a look at some of these setups and kind of go over them. Looking back at 830 was the end of a long uptrend, and then a pullback at 930. And trying to use DTR concepts to make my case for taking a short. This is going to be black and white. All right, we're not going to make a case for a short here. We're going to be, because even at thinking about it, analyzing it, it's very hard. You lose opportunities. You lose ticks. And also said here, it says, "Please save me from myself and overtrading." See, we all know that overtrading is the biggest issue for traders, and that's what I specialize in, is trying to define a strategy, a methodology that works. Works on a high probability, high percentage of the time, and we're able to refine it and define it even to a point where we know when it's going to fail. So now we're just stuck with a setup that works 8 out of 10 times. And when I say it doesn't work 2 times out of 10, what does that mean? Does it fail? Do we see it? Is there news? It could be anything, random, but this is how well this works. And when I go over it with you, and I try to tell you that everything here is to make your entry clear. Don't try to make something that's not there. The easiest thing about this is you're going to be able to see the setups, because the setups have to look a certain way. A divergence has to look a certain way. A quad rotation has to look a certain way. A coil stochastic has to look a certain way. Those things are defined by me in the methodology, So with all that said, and how comfortable and confident I am trading this way, I would never trade any other way. I've been around the block many, many times in the market. And to come to this point and now become a teacher, and knowing that I have new students that have never traded the market before, I wouldn't want to waste their time on anything other than the things that work, and that you could you could hold in your hand. All right. So that's what we concentrate on. We concentrate on things that work, develop the discipline and the patience around that so we could get that, and have the tools to help us identify those. And that's basically what we do. All right, that's what I do. So ARC stochastics, and not to go into stochastics as much as you should, if you're not familiar with the term, it's an oscillator with an indicator that you put on a chart that measures certain things, moving averages, measure price over a certain amount of time, and then you have, all kinds of indicators, high, low, candles, even pivot points, MACDs, RSI. Everything is measuring something, but the stochastics also measure something. They measure momentum, and momentum, of course, is, the power. I don't know, scientific or math. The the proper terminology that I need for this one. Well, it's 9-3. They're all fast stochastics. There's a 9-3, the 14-3. There's the second one down. The 44, probably one of the most important ones, and the 60-10. Now, there's only one line. That is the percentage D line. The percentage K is, that's the look back period, how many candles you're looking back. So stochastics have two lines, a K line, a percentage K line, and a percentage D line. And usually they're plotted on charts. I take my K line off because we don't have to use that. We don't use crossovers or anything. All we're using is signal line divergence. So this is very clean. It has to be clean for me. I have to know exactly what I'm looking at. I want to see everything, and I want to, I just like it clean like this. Good angles. This is on a NinjaTrader platform. This is a NinjaTrader, chart. I also put it on my other chart, my Medved chart, Trader chart. I'll bring that up here for a second, if I can find it. There we go. So I could see that too. It's very similar. So I usually use this during the day when I'm on the show and we're looking at this chart. But I even like the NinjaTrader chart, which is right here. But we'll use the NinjaTrader chart right now just to show you some examples. All right. So you have all four stochastics now. You have those four levels. That's how they're plotted. Just make them symmetrical so you can see them all. And now each one, the smaller the line here, the 9-3, I don't have it posted up here, but you can see it says 14-3 here. And then it says 44 here and 60-10. I just don't have the label up on this one. This is the 9-3 on the top. Each one represents a kind of, this is the fastest up here, the 9-3, because it's only looking back 9 periods. This one's looking back 14 periods, and then 40, and then 60. So these are more, this kind of smooths out over time. And this is something that we pay attention to because in essence, we're looking at all multiple time frames, but just looking at stochastics. Each one of this is kind of a multiple, we have a 1 minute, we have a 3 minute, and we have a 5 minute time frame that we could tell you exactly what's going on just by looking at the stochastics, not even looking at the price level. So I know that 60-10 is tuned in perfectly. My great research here is tuned in to my 5 minute chart, If you when we look at stochastics, a lot of people just put one stochastic up there, and that's typically the 9-3. So when you look at the 9-3, you have the 9-3 on your 1 minute, you have your 9-3 on your 5 minute, you can have your 9-3 on your daily. It means the same thing, But in this case, we have, I'm actually looking at the 3-minute chart here, but in this case, we are waiting for all time frames to kind of get oversold or overbought. Now, by default, 80 is overbought and 20 is oversold, as if you used overbought and oversold levels on these things. So it's kind of a reference point. We like to use them just to kind of determine strength in the overall market. But I'm watching how they all rotate down. And you see how they all start to come down. The 9-3 comes down real quick. And then the 14-3, and then the 44, and then the 60-10 is not quite down there yet. So right about that. So what I always wait for what we call a quad rotation is when each one is under the 20 line. The first time they're all under the 20 line together. All right, so basically this is under the 20 line, this is under the 20, this is under the 20. But this doesn't get onto the 20 probably right about there, right? Right when it goes under 20, and they're all under 20. That triggers a quad rotation. And what does a quad rotation mean? It means when we're oversold on the 1 minute, 3 minute, 5 minute. Now, we could do our own research and look at the 60 minute or the trend during the day, but typically this is a good sign for a move. And that's just part one of our super signal. And what is a super signal, you might say? A super signal is the best setup that we search for all the time. It's the closest thing to the holy grail to trading. Now, what I'm going to show you today, it's going to be, really, really valuable information. I hope you become a member here at Day Trading Radio. This is the way we trade. And we developed that patient discipline. And we have hundreds of traders that work together every day in our chat rooms. And it's really a nice experience to be able to trade with people who have the similar goals and stuff. And we work together as a team. And as you see, this next week is going to be very exciting. I'm actually very excited about next week because we're caught up on getting everyone into the copy trading. So I want to really take that and put that on the front burner, as they say, and probably just use copy trading all week and try to get that thing launched and really moving. The quad rotation is part one of the super signal. Now, a super signal is going to be, and I want to bring up a page right here and show you. Here's my little cheat sheet here. So a super signal is a merger, I call it a merger, of a quad rotation, which we showed you what that means. The 1, 3, 5 minute, all time frames getting oversold, and one of the following HPS setups. Now the HPS setups from the HPS methodology, which is the high probability methodology, HPS setups is like my playbook of trades. HPS high probability setup trades. These are about 7 trades that fit a pattern that you see over and over again in the market. Sorry, my voice is getting a little tired. Anyway, but we want to concentrate only on the top 3. So the quad rotation is the top 3 of the HPS signals here. So the top HPS signal is a divergence, a classic lane divergence, double bottom divergence. Actually 3 types of divergences. We call it pure divergence, a double bottom divergence, or a relative divergence. And I'll show you the difference on the chart. If we have a quad rotation and a coil stochastic, meaning our 9-3 is coiling down, waiting for the 60 to get oversold. That is a perfect setup, and it's very easy to time. Then a quad rotation trend line, a touch, or a retracement, meaning we have an established channel, you're inside the channel, and you have the quad rotation. Everything meets up on the channel line, or it comes back to a recent channel line. That qualifies too. And then we talk about the bull and bear flag. So those three right there is what the super signal is, and that's the top of the top. And if you could just wait for that, you would not fail in trading. You would not. But because that setup doesn't come around every 10 minutes, maybe you have a good super signal once a day. Maybe you have it 5 times a day. You will find them out there. You just have to let them come to you, understand what you're looking at, make sure the market conditions are right, and that's basically it. And then it's all automated. It's automated but manual. This is very important. Even though I have the scripts that identify these, and you can trade with the scripts. The scripts. It's always good to analyze the market on the go. Make sure there's no news. Make sure you're not counter trending or buying a very steep sell-off, and you just happen to get triggered into it. Certain things that you want to pay attention to. Well, let me show you some of these setups, and this is all you have to do. I don't want to hear anything about like this almost was that. There's not almost this, that. If you want to make money in the markets, you have to wait for these setups I want to show you right now. And I want to show you how to get out of them, or if they're not going to work, how to determine they're not going to work. It's very easy. Now, the 3-minute chart is on here. There's 3 chart time frames you could trade. The 1 minute, the 3 minute, or the 5 minute. All right. As newer traders, I recommend the higher time frame. The faster, the 1 minute is very fast and can be very, it's very hard to sometimes take your entry and get your exit, because our stochastics, has a lot to do with our entries, and it has a lot to do with our exits, especially in a trending market. We always want to go, if you're trending down and if you get into a setup, you only want to take it until the 9-3 gets above the 80, and then you want to be selling. And that rule could be even defined more if the 60-10 is under 50. So if the 60-10 is under 50, trending down or even embedded, these turn into be very good bear flags. And that's easy to recognize. All right, what do you have to do? You have to have, that has to be oversold. Everything has to be oversold. We get the fast rotation. Say you got the quad rotation and you get a fast rotation, but this stays under 50, doesn't start to ramp up. You always want to be taking it off above the 80. All right, so just a couple of little things like that. My throat is really hurting. All right, so let's go through these. So the market's doing, whatever time you're in the market, let's start with, we're actually going to start with the 3-minute time frame, because a 3-minute time frame is an excellent time frame for a beginner trader to start trading with. It's not too fast, and it's sometimes it's a sweet spot. We get a lot of signals with the 3-minute, and it gives you enough time to be in a trade. How long does a trade last when we trade like this? Well, again, just because we are scalpers in the market, we're not trying to one-time this, one trade and out, or get the biggest bang for the buck. We're identifying levels that we get a high probability chance of a move that we're going to see. And we usually see that because the indicator, the stochastic indicator, is a change of momentum. So we actually have the advantage by using stochastics. So it's easy to see it, very easy to see it. You just have to get in it. So let's see here. Where are we at here? So the quad here. So again, the market opens up. We're watching the 3-minute time frame, and we're just applying basically 3 trade setups we're looking for in the market. And we analyze when we get to that point. We'll see it, and it's very easy to recognize. Now, typically, our divergence rule is, we want to have a good angle. High angle between stage 1 and stage 2. Stage 1 is the first low. Then you should get a little bounce, brings us back over the 20 line here, and then it comes back down to the lows, takes out the lows, or relatively gets close to the lows. And the stochastics have to be, that angle between the low and that higher low is if that's steep, that's really good. The only thing I do not like about that is that I prefer for beginner traders to make sure your divergence is above the 20 line on the return back down. So you have the low, that little pop, and you want to have that turn up above the 20 line. Just as always, that steeper the line, the better the setup. So we continue on, and we don't see anything. Just looking at things, not much seeing. This is kind of choppy. This is it's going at, I don't know what day this is, but the market's this is on the 3-minute time frame. So remember, we're looking at the 3 minutes. So we're just looking for the setup. We're not analyzing anything. I'm not trying to say that. I'm not even really looking at a quad rotation. I'll point them out. But we'll here's a here's a setup here. So you have the double top, relative top. The candles all kind of meet. The closing price meets, but you have a very steep roll over here. Now, this is the key to making money and not losing money. Now, this is, first of all, this is right at the end of the day. Might not even take it because of that, but I still like to call the divergences because we like to see them work. Anyway, let's be realistic, and where would you get in on this? Where would you be able to see this starting to turn? You should be able to probably get that first candle and get right down the bottom of that first candle, 52.0575. All right, 52.0575. Because that one popped up a little. You had some time hanging up in this area, and you could definitely see that turn over. And that's what we're looking for. We're always looking for that divergence. So if I see that weaker, and where price is already there, you see how the prices? We go up here. Right up here, the price has already turned back here, and at that point, the stochastics are way down here. So you should start to see this. Remember, this is about understanding how to make this. Teaching you how to fish, how everything works. You have to be able to see it before it even happens. That gives you an advantage of getting into it. And so you get in, and then you actually see this thing rotate down 2-3 candles. Now, let's remember. How long are we in the trade for typically? Well, after a divergence, the rotation to overbought level or oversold level, in this case the sell divergence, when you get that sell divergence, we want to probably gauge our, we calculate what's going on around us. Is the bigger trend down? Yes, it's kind of the bigger trend was starting to roll over. That's the 5-minute time frame, might be overbought. We have a 1-minute divergence. We have it on this 14.3 also, not on the 44, but on the 14.3, 43. And you can probably take that and you put your stop right up at the highs of those candles. All right, and you have an entry down here. It's not the best setup, but because of the divergence, you're going to get something out of this. And how do you get out of it without saying, all right, it's back, and then it kind of drifts back up? How do you know to get out? Well, everything has to be automated in a way that your mind has to be automated. You have to know that you're going to take it off on the first, right when it starts to break through 80. Right when it, 20, the 20 line down here. I'm so used to the buy side. So right here, it's getting down to 20, and right when it pierces at 20, you want to sell, in this case, cover, or buy the cover into that weakness, because 9 times out of 10, it's going to bounce back up, and that's just going to be frustrating. So this is going to give you something. Maybe it gives you, let's see, it was 52.0575. It dropped down to 52. That was 5, 6, 7, 8. That's a 10-point move right there, actually, in 4 minutes. I mean, that's crazy. Wow, that's like a 10-point move right there. Anyway, all right, and that's plenty. That's what you want. And you're always going to protect yourself, because you're not going to get divergence like this. And then we're going through it right now. I'm saying, all right, show me, because we know when to get out. We're not going to be holding on to anything. The divergence is either going to work, and it's going to rotate down real fast, or it's going to take its time, or it's not going to work, and it's going to just flatten out and kind of turn. You're going to have one candle that's going to take out the highs, and you're out. You might even be able to get out earlier. If you get that fast rotation, you just take it off. You don't say, can I get any more? Because every minute, every second you think, it pushes back up. And then the mind games start to play. All right? And you just don't want that. What we do is we recognize the area that's going to work. This is what we're looking for. We're going to get something from it. Maybe we're going to get big. Maybe we're going to get little. It doesn't matter. It's all the same. It's all the same. It's automatic. Because if we did this all day, the most, 70, 80% of the time we got oversold, it would have pushed back in the opposite direction. You know how frustrating that would have been if you were in a trade and you just give it right back? So you had to get into that discipline of taking these profits. Now remember, we're on a 3-minute time frame. So this is a 3, 6, 9, 10. So this is like a 10-minute hold. That's plenty of time. Plenty of time, to be in a trade. And that's not the best example because it's right at 3:30, 4 o'clock. But here we have looking. And let's not fake each other out. Let's not pretend there's one, A lot of people will say, is there a divergence here? There is what we call a running little divergence, but this low, this low and this high over here represents this high and this higher high and the lower high, the change of momentum. It didn't get above 80 here. It technically is a divergence here, but I wouldn't call something like that. The big ones are easy to see. And say here, this is what's going to save you, because a lot of people are getting into these divergences. They're going to get into the divergences. And what's going to happen is they're going to get a bad fill. Not everyone, they're not going to get in everyone. Say this is at 5 o'clock in the morning. Not to say you're going to be here at 5 o'clock. But look at this. It started to move up here, right? And you're like, all right, I'll take that. And you maybe get in here. Yeah, it didn't really take off, that you're in here. 51.94. It's a definitely good divergence. I'd be in there, right there, easy at that point. 51.94 and a quarter, maybe 51.94. Where'd it go? 51.97. I went to 59.97 and 98 and a half. All right, you're not going to get all that. All you're looking for is a point to 2 points on a trade like this in the middle at night. Because this is going to give you something. It's automatically going to give you something. Most of the time, people will get a bad fill, or they won't think about taking it, or they will chase it, and it'll be right at the highs, and it'll turn over. You got to watch it. You got to recognize. You got to take it, and you got to take it off. You got to take it off into. Again, I always take it off on my first rotation, but you have to be proactive on this. You have to say, well, I'm very close to the 80, and it's also the 20, so you know what that means. That means that's more of a bear flag, and it's probably going to hold under the 20 and move down. So even if it gets up there and you have the 20-period moving average and you have the 80, that's a bear flag. So you better just get out, You get out there. The 20-80 is a bear flag, just like the 20-20 bull flag. So even if you get in there, you know when to get out, each and every time. Big divergence here. Now, big pop. This is a big divergence. Because of news, it was 8:30, and it did get a follow through before coming back down. Do you trade news like this? Not typically, but in hindsight, if you do see a big divergence on it, 9 out of 10 of them tend to work. So if you're doing with a 3-minute time frame and you have a nice divergence, it's going to go some. We're always watching. This is on the 3-minute time frame. All right, this is a little bit different of a time frame that we use during the day. If we're using the 1 minute, I want to switch to the 1 minute here for a second. It's going to be a little bit more choppy, and it's going to be more difficult. So, you will find the setups, they're universal setups. You're going to find these type of setups on all time frames. I could see these things. And they're going to be more choppier. Like this is what we call a little lip trade. It's a low and a higher low, but a very small little lip with a little candle here. And look what happened. It didn't go that far, but what told us to get out? The 9-3. So whatever time frame you're using the stochastics on, abide by it, the same thing. You're not going to get as much profit on the 1 minute divergence because it's a tighter time frame. You might not even get, that's telling us something right there. That fast rotation and it held under the 20. This is pointing down. That is just another signal for us. It's a bear flag signal. Our stochastics bounce up to the 20. A rotation happens above 80. The 60 period is under embedded or heading down. Embedded under 20. But if it's heading down, it's just as strong. And that slowly moved back down. But here's nothing. And again, there's a lot of room here that you have 10:30. Do I take a shot here? Do I get in here? It's breaking out. Oh no, you don't. You know what you do there? I mean, it's obvious, right? So here you're looking at it, and you have your high, and you have your higher high, and you have that lower high right there. And a nice move down. Now the market's up at the 1 minute time frame. This is the game you have to play. You can't be, you got to have a direct. You got to know why you're getting in. It has to just fit that criteria. Put your stop in right away, and then follow it down. But try to take profits on your first dip underneath the 20. Now, in this case, it went a little down a little further, then popped back up, then moved back down. But you can adjust this. If this is something, if you're pointing down on the 60-10 and you get a nice sell-side divergence and this is turning over, you're probably going to watch the bigger trend be down. Remember, the 60-10, especially on the 1 minute, represents the 5 minute. It represents our 5 minute time frame. So if we're pointing down on the 5 minute, that's a bigger pressure to the downside on the overall chart. All right, so let's say it's a nice little flag, but you would take that. You have to take that. Here, I mean, this is beautiful right here. It's not hard to see. It's not under the 80. Again, you have to make that decision. But it's a steep divergence, and that's math. The 80 just happens to be a marker that's been placed on default over time. But the truth is, we want to see the shift in momentum as the price, and again, it rotates back down, and you take it off right there, and you're safe. It's a safety net. The key is identifying them, watching for them, knowing when a divergence is going to set up. Now, all right. Have 3 or 4 charts on your screen. This is a big chart I have right here. This is on a 55-inch screen. Break that 55-inch screen into 4 different charts. Have the 1 minute, have the 3 minute, and have the 5 minute in front of you. So each one you're able to look at each one. If you have that real estate, we call that real estate on your monitors. Again, I don't see anything here that represents what we look for. Now, there's other things that we trade, the bull and bear flag, and that's easy enough to say. When we have a very strong trend line, we're holding the 20. You just gotta buy every time the stochastics, sell off and get near 80. You buy as it touches 80. If the 60 is embedded and the price is above 20 or the 50, in this case it's on the 50, but that's fine. They're very close to each other. That's a little bear. That's a little bull flag right there, and that's how we identify it. So it's just like the same thing. If this is not anything that we know, we just kind of wait. You got to figure out something to keep you busy. This is a great divergence. It's a harder divergence to see because it's just so flat right there, but you could see the higher low right there. It's just a good higher low. It's definitely, here it is here. Oh, sorry. And now again, you get a nice initial pop. It gets up here, and then it kind of goes sideways. But overall, you could say, well, do I have what, do I want to catch all this? You have the option. The thing about divergence is they're going to give you one of the best signals for lows, real good lows too. Now, you kind of measure that with your 60. If you have a divergence, and this is a pure super signal right here. Remember I talked about super signals? And this is going to be what the super signal is? I want to end the video at this because this is a two-step process. Oh, tough guy out there. Got a guy with the car racing by. I wish the cop would grab him. Well, anyway, this is it. They might come and take me out after I give this out. I might not be around this week. If I'm not, I don't know. All right. When we have the super signal qualification is you got to have the 9-3, 14-3, 44, and 60-10 all underneath the. I want to try to get a parallel line here. If I can do a line, I don't think I can get it extended all the way. Let me see. Vertical line, F7. So right here, and this is important here. I'm going to tell you, look at this. This is excellent work I'm doing. I didn't do the stock watch list yet. All right, so again, this is the quad rotation right here. Quad rotation, everything came down. Now, when a super signal happens is we look for a bounce off the quad rotation to come into a divergence and have a double bottom or any type of divergence, one of the three divergences. But we have to have a bounce off of a quad rotation where the 9-3 is the one that's going to give us the divergence. So it's a quad rotation bounce. 9-3 gives us the divergence. That is typically the bottom, and they give that the biggest moves. All right. So it has to be a low, a quad rotation. Then the 9-3 has to pop up and then give it divergence. Here we have, actually here, this is a setup. Let me see. F2 here. George Lane calls this a bad bottom. I call it a running divergence. And it's where two divergences happen one after another. Typically, you would buy that first divergence and you would place your stop there and say, all right, we got a higher low here. Right? You have a higher low, but what happens here? It actually goes up just a little, and then this just turns right over again and takes out the stop. It takes out your stop. But what happens is the stochastic didn't come down underneath the 20. Did not come down to the first low, and that's the original low of this. You go back to the first low of the original divergence. So here's stage 1, stage 2. This was stage 1, stage 2, and then it failed. It failed, it turned over, took out the stop, but then still held above stage 1. All right? So this is what we call running divergence. It's still a divergence, and it turns back up. You get right back in. This is a rare event, but when it's a rare event because it tricks you here. But the second divergence is perfect, and it's just a great confirmation of a pop. And again, it went, it was pretty strong. Had a nice move. 81 to 93, 12-point move. That's a nice move right there, and that's at night too. 2140. So that's 940. So 940. You got a nice quad, not even quad, but a running divergence. It did come off of a quad. It's a very strong setup. You might say that didn't go far. It went far. It went what we expected to go. Remember, everything is defined for us. Everything is defined. The super signal is defined. If we have a divergence and it fails and it turns into divergence again and we have a higher low, it's called a running divergence, and you have to take that. That is defined. This is a rare event, but this makes it even more profitable if it holds this. So you have these things you put on your, you count on your fingers, That's on the 1 minute. So we talked about the 1 minute. We talked about the 5 minute. Here's a nice divergence right here. We didn't look at the 5 minute. And again, I say the 1 minute's could be a little choppy. So stick to the 3 minute if you're new in trading. You want to get a feel for this. It'll give you enough setups. But remember, you have multiple charts, and then we're going to look at the 5 minute, and we'll probably end it right there. I should have just ended before when I gave you the holy grail of all trades. I had a thing back in the day, day trading radio. It was called Chart Bounty, and if you could find me a divergence on a chart, I would take the trade and we would split the profits. And it was a pretty cool thing, So I had a bunch of chart bounties, because I knew what setup I was looking. So I put it on a piece of paper. I said, I want this setup. Everyone tried to find this setup, send it in, and I take the trade and I PayPal them. At the end of the trade, we do it live on the air. It was great. Here's the 5 minute time frame. 5 minute, you're still going to use the 9-3 stochastics. All right, you're still going to use it, but again, you're not probably going to see the setups like you used to. Now, remember we drew that line before and we said it was a super signal? Remember? Before we got to go back. I got to show you this. I think it was on the 1 minute or the 3 minute? Shoot. Let me see. I had the line. It might have been, I don't know where it was now. I needed to, I wanted to show you that there, this was it. So this was on the 3 minute chart. This was on the 3 minute time frame, right? But actually it was on the 1 minute time frame. This was at 22:30. So let me go to 1 minute. $22.30. All right, so here it is. So this was our super signal on the 1 minute time frame. Now, if you look at this and we look at the different time frames, look where it shows up on the 5 minute. If we looked at the 5 minute chart at that same time, if we looked at that 5 minute chart at the same time it was setting up as a quad rotation, what would that look like? So let's zoom out. Here it is right here. That is it's a quad rotation on the 5 minute too. It's really a super excellent spot there. I mean, that was the spot. This is a 5 minute divergence here. Now again, what's the rule here? Rule is the 5 minute divergence is going to go as many candles, up until you get to that 80 line. That 80 line is going to work on whatever time frame you're using. Whatever time frame you're using. If you get a signal, you won't have as many on the 5 minute, but when you do, you got to really. Here's a nice one. Looks like there was some kind of news and a little reversal. And you can see that on news. It's really actually a good indication, because what's happening here is we're measuring momentum. And the momentum didn't really shift, even though the price the algorithms caught that and stuff, but the internals didn't really, weren't faked out. Never really popped, turned over quickly. Good sign of a divergence, and you had, a nice follow through. This was a little divergence here. I'm looking at this angle here. All right, and I'm starting to see that right up there. I'm seeing that start to lose. Stop goes right above the highs here, and you get it right back down to the 50 here. You can catch a little bit more, but you'd want to be careful because this market's all over the place. So only identifying the highs and the lows based off of the divergence. Simple as that. Multiple time frames, 2 setups right there. That's the only setups I want you to do. And remember, the big ones are when we have the quad rotation and the divergence, or quad rotation and a coil. I won't go into the coil this video, but I hope John, this video is actually going out for you, but I also made it for everyone else because I get a lot of these questions. And again, it comes down to discipline, people. We know what works. It's just about being in the right spot at the right time. That's my job, is to make sure you're in the right spot, right time, right spot, right place, right time. That's my job, Johnny. Oh, yeah, so how do I get this? So, the Zello alerts. If you're not familiar with the Zello alerts, they've been taken off. That's where we have our app, and we talk on it. It's a walkie-talkie app. You have your phone. It comes across as an audio alert that we have a super signal. So if you see what I'm looking for, when I see it, I send it out on the Zello alert. Look in the link for the how to sign up for that. It's super cheap. If you're a member of Day Trading Radio, you already have it. And if you're not, you can get it for $20. It's incredible alerts. Look in the link in the video. All right, and I'll leave you at that. Here's the ES 1 minute chart. What we're seeing here, and again, I won't talk about it too much. Embedded 60 on the bottom. You see the 60 minute on the bottom here. And what I say embedded means, it means it's underneath, kind of underneath the 20 level, give or take a couple points. We're just stuck down there. And when we're stuck down there, look at this. Every time we get up into the 80 line there, that qualifies as a bear flag. All right. Even though these are really, really small, the math and science and everything else is there. The momentum, it's not that big of a move, but you know what? You're going to be in the right direction. This is the right direction to be in. If you were to say you had to take a trade, you're only taking these couple trades. This is the important one. This is the big boy right here. That divergence, quad divergence right here. It was a quad. Right? Quad, and then we had a high level divergence right after that. Perfect. Absolutely perfect. And that's going to give you the biggest moves. Look at the size of that move. And it ended right at a big divergence on top. Look at that. Well, that's the key to trading. Not overtrading. Stick to the plan. We do it together every day here at DayTraderRadio.com. I hope you enjoyed that video. If you need more help, definitely reach out to me, DTRS at DayTradingRadio.com. My templates, work hard on this. Is the Medved Trader. I have the Medved template. You can sign up at the, I'm thinking of the forum, the Yahoo groups, Day Trading Radio Yahoo groups. I have a lot of my templates over there. That's Day Trading Radio on the, not Yahoo group. I would call it Yahoo. What am I thinking? Facebook groups. Facebook groups. Go to that. We take a look at that fast. I'll just show you I'll put that stuff over there. There's a super signal. Remember? All right. I think I have some examples of the super. We didn't even go over the coil, but that's the other signal that we like is the coil and the quad. So quads, coils, perfect. Bull flags, same thing. Embedded, rotations. That's the script actually. All right, here it is. So Day Trading Radio, it's a group, private group. You just have to push join, and make sure you're not a bot. Well, basically, that's where we post a lot of our stuff. So I have the file section here, and you can see there's some script stuff here, the chart templates. I'm going to actually put my, there's a good calendar here, calculator here. It's an ES Mini calculator. I love it. It's great. And again, if I could put some other stuff up, I'm going to upload a file right now. I want to upload my my MedVed file. See if I could. Actually, let me go over here. I'm actually going to do my ninja chart here, template. My rockbot template. That's it. Good enough. All right, you can see it now. Just go to the last modify my rockbot files there. Some other stuff, good stuff there. Also, if you kind of go through the discussion there, you got the latest coupons for the Bolinox and the 80% off for the Apex. Again, have these things up and running for next week. We're going to be using these a lot, so pretty excited about that. The DTR90 is the 90. That's the coupon code for Bolinox, and for Apex, 80% off is DTR Apex, APEX, a one-day qualification. All right, so that's Day Trading Radio group. All right, I hope everyone enjoyed that video. If you need any more, you know where to find me, daytradingradio.com. I'll see you guys in the market.